For most of 2022, the crypto market was boring. We saw barely any price movements. Bitcoin wasn't really moving. Altcoins weren't really moving. But then recently, there's been some big news, and now there's volatility back. And this is where traders make a lot of money because it doesn't matter if prices are going up or prices are going down. Traders profit when there's volatility. But the problem that I see with a lot of noob traders and beginners is that they simply don't have enough money. For example, let's say you have $100 and you're making trades. You make 2% in a day. That's only $2. But the same person who has $100,000, 2% is $2,000. So the thing that I started to do when I was first getting involved in the crypto space, the way I was able to make a lot of money was through prop firms. And I've been using one called FX2 because ultimately the way that these platforms work, specifically FX2, is that they make it extremely simple and extremely easy for you to leverage the amount of capital you can trade with, because it's so much easier to make a living, make significant money if you're trading with $100,000 or $200,000 instead of, $1,000. So with FX2, they ultimately pride themselves on featuring the lowest cost single stage of valuation in the prop firm industry. They said their process is extremely simple and straightforward, and I was able to get approved for a $100,000 account in literally like a day. And then you can start trading instantly. So the way that FX2 stands apart from other prop firms out there is really their simple evaluation, single step evaluation platform. So the way it works is they say they have a one-step evaluation. Their evaluation process is fair and simple. And the thing is most of the prop firms out there that I've used in the past don't make it so easy to get money to trade with. They require a lot of different information and background. It's not so easy. But with FX2, the way I was able to get funded for a $100,000 account, and you could do the same exact thing, is you simply, let's click on the $100,000 account. They have all different ranges between $200,000 being the max and $10,000 being the minimum. So let's just click on 100,000. The first of which is that your profit share is up to 85%. Profit target is $10,000. Daily loss max is $4,000, and max drawdown is $6,000. Ultimately, we'll go over what these numbers mean in a minute, but there's nothing really to worry about with those. The key thing that you need to be aware of when opening an account is that refundable fee. So each account level, whether that's a $10,000 account or a $200,000 account, has a different refundable fee. But for a $100,000 account, the refundable fee is $475. All you need to do to be able to get evaluated and approved for a $100,000 account is click Purchase Now. You click Purchase Now, you put in all of your information, fill it out, and then you have to pay $475. The thing is that this is a refundable fee. So if you're able to trade successfully, everything goes according to plan, then you get that money back. So you're really out no money. If you were to, let's say, lose money right away, your account was terminated, you'd be out $475. But the risk to reward, in my opinion, was so much more on like the profitable side. It made so much more sense for me to go about doing this because I was able to open up an account, trade with $100,000, even if I only had $475. So this is why I did go about it. I already have an account, and let me show you what the dashboard just looks like really quickly. But so if you log in, you can see how you have an account. There's a dashboard, notifications, profile, connects to Discord. You could have multiple wallets as well. You could even have an affiliate link if you want. I don't even have an affiliate link set up, but that's something that you can do. When you're looking at FX2, there's like 6 main features that set it apart from all of the prop firms. You can, in my opinion, the 6 things that really separate it are these right here, which they talk about, but there's also 2 others. They talk about trade your own style, because when you're looking at a prop firm, sometimes they have some rules on how you're able to trade, what you can do. But with FX2, whether you copy trade using the EA, scalp, or trade the news, they let you do whatever you want, which is something that is really important. The second thing is that they have a high profit split. So they have a high profit split where you're able to collect up to 85% of the profits that you've earned. And ultimately, if you're making money, they're making money. Because if you withdraw money, let's say you made, let's just call it $100,000 in profit. You made a $100,000 in profit. You'd be able to get 85,000 of that. They'd get 15,000. So they want people to trade successfully on their platform and, use their money because If you're making money, they're making money. They also have no time limits, so you can, get your account funded in one day, month, year, whatever you want. You don't have to have any sort of rush as to you need to trade by a certain deadline. You can do whatever you want. They have a one-step evaluation, the refundable fee that I talked about, and also quick payouts. So they allow you to get your first payout in 7 days, and then after that, every 14 days. And a lot of other prop firms, they have much, much longer time windows. So those are like the basics of the platform. But now I want to go over what I was talking about earlier in terms of that max drawdown and that daily drawdown and what those mean. So ultimately, the max drawdown is something that is on every single account size. So for that $100,000 account, the max drawdown is $6,000. Ultimately, it's 6% of the total amount you are funded for. So if it's a $200,000 account, the max drawdown is $12,000. It's just 6% of what the account was funded for. And the way that this max drawdown ultimately works is that it starts at negative 6% of your starting balance. So if your negative equity reaches 6% of your starting balance, their system will automatically detect the violation and your account will be terminated immediately. So if you started with $100,000 and your account dropped to $94,000, well, they would close your account out. Simply how it works. That's how they protect themselves from people just losing hundreds and hundreds of thousands of dollars. But the cool thing about it is, let's say you start to grow your account. Well, then this drawdown actually becomes more in your favor, because let's say you grow the account to $106,000. The new max drawdown would be permanently locked at $100,000. Why that's important is because then let's say you go over a course of 6 months, you've made 30-40%, and you've turned that $100,000 into $140,000. Then you might be worried that, oh, there's one bad day, you lose, a good amount in a single day, your account's going to be terminated. No, you don't have to worry about that, because once you're over $106,000 for this account, once you've made 6%, they just set your max drawdown at the initial funding amount. So like they say here, if you achieve a new watermark, a new high of like $140,000 balance, you would only violate the maximum drawdown if your account lost more than $40,000 and it's under $100,000. So you could lose more than 6% if you go above certain levels. So that's something that's really cool. It's not that 6% is trailing and following you the whole entire time you have the account. It's set to that initial $100,000. The second thing is that daily drawdown. So like I said, the maximum amount you can lose on your account is 6% of that starting amount. So if you start with 100, the maximum your account could fall to before terminating would be $94,000. But they also have something called a daily drawdown. And the daily max loss is the maximum your account is allowed to lose in a single day. And that is 4%. So if a trader's negative equity reaches 4% of their previous day's balance, their system will automatically detect the violation and their account will be terminated. So it says, note the daily max loss is not based on the previous day's equity. It is based on the balance in your account. So for example, if your previous day's closing balance was $100,000, your account would be terminated if your equity reached $96,000. They said that ultimately that is a way to protect against people making, stupid decisions or losing a lot of money again. So ultimately, these are the only two evaluation metrics that are in place in order to have an account with them. If you go about spending the money and you purchase, a funded account, let's say $100,000, all you have to do is spend $475. As long as you're profitable and you're trading and you're consistently making profits and you don't lose massive amounts of money, you'll get that $475 back and you'll be able to keep your account for as long as you want. So this is why I have used prop firms in the past, because if you are a successful trader and you're able to make money with $100, you're simply going to make the same trades that you would with $100 versus $100,000. You just can scale up a lot faster and make a lot more money. This is a way where it gives beginners an opportunity to start making serious money in the crypto space, and something that you wouldn't be able to do elsewhere. So the reason why I use FX2 and why I actually opened up my own account on FX2, recently, and I've used prop firms over the last few years, is because it allows you to leverage the money you have with very minimal risk. So yes, there is a risk. The risk is that you lose your initial fee, whether that's, $100, $285, or depending on the size account you get. That's the initial risk, is that you'll lose that initial fee. But other than that, it's pretty simple, and it is a unique way that a lot of people don't even know about, where you can take advantage of your trading and, take advantage of larger accounts.